Have you ever felt that pit in your stomach when you see your investments suddenly drop? Have you ever wondered how to protect your money while the world seems to be falling apart outside? If you want to learn, in a practical and straightforward way, how to invest in assets that resist global instabilities, stay with me until the end of this video. Today, I'm going to show you exactly what you can do to navigate this crisis with more security, even if you're a beginner or a mid-level investor, and more. I'll give you clear examples you can apply today. Let's go, because every minute now can make a huge difference in your financial future. In recent weeks, the global market has been directly impacted by a movement that started in China, a price surge that is already affecting several sectors. As a result, the whole world is starting to feel the pressure. Rising inflation, more expensive consumer goods, stalled production chains. And what does that have to do with you? Absolutely everything. If you invest, even a little, or are planning to start, you need to understand that this volatility can erode your assets much faster than you think. Products that once seemed safe are now suffering from strong fluctuations, and those who aren't prepared risk losing a lot of money. And here's the hard truth. Many small and mid-level investors ignore warning signs like these, thinking the crisis won't affect them. But the reality is that during times like these, those who are poorly positioned suffer the biggest losses. When there's a price crisis, risky assets crash, common funds lose strength, and even investments once considered safe can become vulnerable. Without a strategy, the consequences are clear: devalued assets, postponed goals, and dreams put on hold. That's why it's critical to act now, not tomorrow, not when the market gets even worse. Now. But hold on. Despite all of this, there's a positive side. Crisis moments are also moments of opportunity for those who know where to step. While many panic and sell their assets out of fear, others understand that volatility is the fertile ground where great fortunes are built. If you're prepared, you can protect your investments and even grow while others retreat. And that's exactly what I'm going to show you over the next few minutes. So let's get straight to the point. Where should you focus your attention right now? On sectors that have historically benefited during times of instability. First, commodities. Gold, oil, precious metals, and basic foods tend to appreciate in crises because they are seen as essential or protective assets. Investing in gold, for example, is a classic way to protect your purchasing power. Second, the energy sector. Companies tied to oil, gas, and renewable energy tend to maintain or even increase their profits because global energy demand rarely falls, even during recessions. Third, the healthcare sector. Medicines and medical services are constant necessities, regardless of the economic situation. Investing in these sectors can shield a good portion of your portfolio from the worst effects of the crisis. But choosing the right sectors is not enough. The key to surviving turbulent periods is diversification. It's no use betting everything on a single asset, no matter how safe it seems. Diversification protects you from negative surprises specific to a sector or company. Let me give you a practical example. Imagine a portfolio designed for crisis times. You could allocate 40% in commodities, divided between gold and oil, for instance. Then put 30% in inflation-linked fixed income, like government bonds or IPCA plus funds. Assign 20% to stocks in defensive sectors, such as healthcare and basic consumption. And keep 10% in dollar-denominated assets, like international investment funds. This way, you not only reduce risks, but also position yourself to take advantage of upward movements in strategic sectors. Now, speaking specifically about protective assets, it's crucial that you know your options. Physical gold or gold funds are classics that have resisted economic crises for centuries. Another important point is investments linked to inflation. Funds or bonds indexed to inflation help protect your money from the erosion caused by rising prices. Furthermore, diversifying part of your capital into dollars or international funds can further shield your assets against local crises. And the good news is that today, You don't need large amounts to access these investments. There are funds available with very low minimum investments that already provide this protection for you. But even more important than knowing where to invest is adopting the right mindset. Those who survive and grow during crises are the ones who stay calm, act strategically, and think long-term. There's no point in chasing quick gains now. The focus must be on protection and consistent growth. Discipline, patience, and preparation are the most powerful weapons of a resilient investor. Crises come and go, but those who manage to come out stronger are exactly the ones who built a solid foundation while everyone else was paralyzed by fear. And now, if you really want to protect your money, the best time to act is right now. Start reviewing your investment portfolio today. Look at your assets and ask yourself, would these investments survive a major crisis? If the answer is no, it's time to apply the tips you learned here. And if you want to keep receiving practical strategies to protect and grow your wealth, subscribe to this channel right now. Every week I bring you content that will help you invest with more intelligence, security, and a future-focused vision. And there's more. In the next video, I'm going to reveal 5 assets that historically have beaten every major financial crisis in history. Don't miss it, because this could be the breakthrough you need to transform your relationship with money once and for all. I'll see you there. Your financial future starts today, and the decision is in your hands. Let's go together! Go together!